Well, hello there, traders and investors. I'm L.A. Little. Hey, this is your daily NeoTA wrap. We take a look at these markets. We're doing it different. We're doing it from a neoclassical perspective. What does that mean, right? I feel like sometimes it's just blows right over the top of your heads. We're looking at supply and demand charts. You don't see that hardly anywhere. We're not using oscillators. We're not using moving averages. We're not using trailing indicators, right? We're using information that's available to us right here, right now. Very different, folks. And I know that probably doesn't resonate, but think about what I'm saying. Right here, right now, supply and demand. That's what moves markets. The market gives you information about supply and demand if you know how to look at it. Doesn't always give you the right information because the market is not always right. But it gives you good information most of the time. The information today was this market should trade higher tomorrow. And if that's all you stopped in to see, you got your information, you can move on. But if you really want to understand how to figure these things out for yourself, you really should think about joining the community. You just got to write me at my personal email address. That's TAT@TAtoday, LA Little. There's 2 mentoring openings right now. If you want to join, your membership costs get cut in half. You join the mentoring program. It's a once-in-a-lifetime opportunity, people. I don't know how to tell it to you any other way. If you want to learn how to trade, if you want to learn how to manage your own investments, then come over and drop me an email, and let's talk about it. I'll give you a shot back. We'll get on the phone. We'll discuss it. I'll see what you're trying to do, see if it matches what we do, and if I can help you as I've helped many others. As far as these markets, let's look at the numbers here. So what did you get today? You got another down day. The Russell, that's 4% off the top straight line. That's a pretty big move. This thing's going to bounce because everything else is going to bounce, and we'll look at why here in a second. We were flat on the NASDAQ, flat on the Dow. We also were flat on the S&P 500. NDX a little bit higher, but almost flat as well. So pretty much a flat day. That's been after, 4 or 5 days now, straight declines, big declines in the Russell, so-so declines elsewhere. Over in Europe, you actually had a little bit of a push to the top side. Draghi comes out and says, we're going to give you as much juice as you need for as long as you need it. What else is new? Gold down, silver down, oil down again, bonds down. Money not coming into these markets like it has been, but money not shooting out of these markets except for in a few areas. Let's take a look at the charts, and let's start with the sectors. The reason this market in general is not ready to give it up is because the major sectors, the most heavily weighted ones, are still holding up. And what are those? Financials, one of them. Inside day-to-day, I believe it's inside. Let's look at the numbers here. 2470. No, actually slightly lower. So you actually get under back over a little doji. This one's going to try to bounce, still hanging at the highs. All right, so you're down just a little bit, but not much. Another major sector, technology. And as we all know, technology doesn't want to give it up. Sitting at the highs, came down the bottom of the big bar, tested into it 2 or 3 times now, reverses. Volume picking up a little bit, but still lower. You saw today, if you were watching the markets today, you saw them try to jam it lower. And it was across everything. And a lot of times that's big, broad programs hitting everything. Sellers weren't down there. If the sellers aren't down there, supply and demand, folks, if the sellers aren't down there, what's it going to do? It's going to reverse and go the other way. The market is a testing mechanism. That's how it determines direction. Once you understand that, and once you understand how to read what's taking place, then you can make the same sort of calls that you see me make. There's some rules. That's neoclassical, but there's not a lot. If you want to learn 2 mentoring spots, in other words, one-on-one education on how to trade these markets, You don't get this opportunity that often, especially coming straight into the program. We just happen to have a couple of mentors free that can actually teach you. I taught them, they will teach you, and I will be the backup to help teach you as well. Technology doesn't want to give it up. Discretionary, consumer discretionary, that's another big weighting. What is it doing? Hanging at the highs, folks. And the other one that's actually picked up that wasn't doing so well is healthcare. Look at this run healthcare has been on. It doesn't want to give it up yet. It's at the top of a big range it's been trying to break out of. Here's the weekly on it. Trying to break out of, hanging at the top. Here's the monthly, hanging at the highs. This one doesn't want to give it up. You take those four weightings together, you're talking about the majority of the S&P 500. If they're not going to give it up, this S&P isn't going to give it up, and the S&P is going to bounce. Well, let's look at that one next. So if we turn our attention to the S&P, what did the S&P do? I've pointed out already, the TA Today charts. These are charts that I built for myself, eventually made them into web services so that you can use them. They find anchor zones. Anchor zones are places that we know demand should exist, right? And we know that because of other principles in the neoclassical model. Price comes into that zone. They try to jam it lower. They flip it around, does a doji reversal, a little less volume than yesterday. This thing's going to try to poke back to the top side. And if you understand the neoclassical model, you're going to understand that your resistance is going to be right up here. That's your target. That's where they're going to try to take it. Now, if they get over it, it's up here. We know that this market is bullish. So we also know from the neoclassical thought that if the trend is this direction, we're going to try to, see if this market can get above that first resistance as it comes back into it and test that top. As a matter of fact, you got volume still sitting up there at the top. It may actually make it back up there, maybe get over it, maybe fail. But what we know right now is, given the information released today, this market's going to flip around, try to bounce. First bounce is probably going to take it right into this area. If you want to find where the sellers are going to be, that's where you got to expect it. And the neoclassical theory makes that quite clear. It's what we teach in the mentoring, hour and a half, 2 or 3 times a week for as long as you need it. That's how you learn, and then you turn around and teach somebody else, and that really cements that knowledge for you. It's a great program. You really should think about it. What else? I could go through all the charts. You've got some other things happening, and matter of fact, if we go back to this single thought here, when it gets back to here, it's probably going to have some difficulty, not because of this, but because these markets tend to act congruently, and when they don't, it's a problem. And the problem is the small caps. As I said at the top of the show, 4% straight line fashion down. You're probably not going to see a 4% straight line fashion back up. It's probably not going to just V-shape it and go to new highs. It's probably going to come up and have some resistance, and there's some places that we could look for that. In particular, this spot right here looks pretty interesting. And so I suspect as this thing bounces, it's going to have some difficulty in that area. And if that's true, instead of this looking as I just drew it, what's going to happen is this bar is going to find resistance somewhere in here, and then the sellers are going to try to come back in and jam this lower and do an ABCD structure of the downside and take out some swing point lows. Now the other piece of that is if you pull over the weekly chart, you don't see it yet. It's going to print the end of this week. This is going to be a swing point low. That swing point low, when you combine it with the daily chart, makes this a dangerous area. And if we get the bounce and it fails and we come back down again, that's going to make it quite interesting. But that's what could happen. What we have to watch is what does happen, interpret that, and make our moves according to those instances. TAT at TA Today. If you're interested in knowing how to trade, how to take care of your portfolio, whether it's short term, intermediate term, intraday, day trading, doesn't matter. The principles are the same. It's standardized across all charts you look at. And as I say in my second book, once you understand this, once it really resonates with you, it will forever change the way you look at a chart. Have yourself a great night. I'll see you next time.